U.S. Foreign relations seems to be a driving force for the oil market this week. The idea of Iran putting more supply on the market, putting some pressure on prices. But I want to ask, why didn't the temporary tariff reduction, why didn't that give a bigger boost to the market? The idea of U.S. and China at least working together temporarily, more ships moving across the Atlantic, more activity happening in both countries.
So I think there's two reasons for that. I think there's still a lot of uncertainty in terms of how tariffs really play out, right? So we have this 90-day kind of pause, and that is pulling forward some demand. But if we look at where demand is set to settle this year, we're looking at maybe, in the best case, 1 million barrels of demand growth. In the worst case, in a recession, we're looking at 500,000 barrels of demand growth, right? So with 1 million barrels of demand growth, even with that in place, the non-OPEC supply growth we're expecting is over 1 million barrels, right? Coming out of the US, Canada, and Brazil. So even in a scenario where the tariff it avoids the worst case, we're looking at a market that is likely to be oversupplied in the second half of 2026. Then you add on the fact that OPEC Plus has changed its strategy and is bringing back production faster than the market anticipated at the start of the year. And you really see kind of this capped upside for where crude can go. And that's already thinking like, okay, tariffs don't play out as bad as we thought. So it looks kind of like, we're oversupplied even in a good case, and we're massively oversupplied if things go badly.
I want to turn back to Iran. You say don't get too caught up in the headlines. Basically, you're saying that the sanctions, while they sound terrible for Iran and seem like they're limiting, they're not as limiting as we may think.
Well, right now, Iran is exporting over 1.5 million barrels a day of crude, right? So we have sanctions in place, but they're not being widely enforced, and they're able to really pump and export a lot of crude. What is the swing factor here is the market was actually anticipating maximum pressure from Donald Trump this year, which would have brought Iranian barrels off the market. He has done a complete 180 on that. And the market's now saying, okay, we're not looking at a supply loss risk. We're looking at potentially barrels being brought on. The amount of barrels that Iran can bring on if sanctions are removed is around 200,000 to 300,000 barrels. This isn't a huge number. What I think the market's really recalibrating for here is that we were anticipating Iranian barrels off the market this year, and we have to walk that back. So there's a lot to consider with Iranian negotiations, and I would say the headline noise is going to cause some intraday volatility, but to look less at the noise of the headlines and more at what's happening. The sanctions, we have increased some of our sanctions in the last week, but when we start to enforce them, that's when things get real. And if we do get a deal, when do those Iranian barrels actually come back on the market? I would guess they don't come back until very late 2025, even if a deal is reached.